Good morning, you're watching Businessworld Live. I'm Danny Laurel. It's the start of a new trading week. Let's kick off with our banner story. The government has removed 2 infrastructure projects and has added 13 new ones under the revised list of infrastructure projects. Data from the NEDA showed that the 34 billion peso ICT Capability Development and Management Program and the 4.2 billion peso Bohol Northeast Multi-Purpose Dam have been dropped from the list. On the other hand, 13 projects with an aggregate cost of 523 billion pesos were added to the list. Among these are the Bataan-Cavite Interlink Bridge, Laguna Lakeshore Road Network Project, and 2 COVID-19 related infrastructure projects. The government has revised its list of flagship infrastructure projects several times since 2019 to prioritize those that are implementation ready during the Duterte administration. The flagships, a sublist of the priority projects under the Build program, now has a total cost of over 4.68 trillion pesos. It includes 112 projects with 29 targeted to be completed before President Duterte ends his 6-year term next year. 51 are ongoing and 28 are in the pipeline. 4 have already been completed. Now, analysts are expecting the Bangko Sentral to keep benchmark interest rates steady on Thursday. That's on the back of improving inflation. A Businessworld poll held last week showed that 14 out of the 16 analysts expect the central bank to retain its key policy rate at its record low of 2%. Analysts believe it is crucial for the Bangko Sentral to retain its accommodative stance in the meantime. ING Bank senior economist Nikki Mapa explains a calibration of rate settings would derail the economy's, quote, very fragile recovery and only delay the economic rebound from the pandemic. PNB Head of Research Alvin Arogo meanwhile noted that government measures meant to ease inflation pressures will also support the BSP's accommodative policy stance. The Bangko Sentral slashed benchmark rates by a cumulative 200 basis points last year. Borrowing costs have been at record lows since the 25 basis point cut in November. Kicking off the market report with a quick check on our local units, analysts are actually saying that the peso is likely to appreciate versus the greenback. This, of course, as the market is expecting the Bangko Sentral to hold steady on its rates. Now, this according to Carlo Asuncion, chief economist at Union Bank. He traced the depreciation of the peso last week to the market volatility. That's, of course, after the U.S. Fed had signaled that the policy could come earlier in terms of tightening in 2023 rather than later in 2024. Now, this according to Mike Ricafort of RCBC, saying the government's move to continue reopening the economy also was a major factor leading to the depreciation of the peso, and that could boost the imports and demand on the dollar. Now, you can see that on my terminal here, the U.S. The peso to the greenback trading at 48.54 to the greenback. Mike Ricafort expects the peso to trade between 48.30 to 48.50 against the dollar this week. So a little bit of strengthening there, while Asuncion expects it to move between 48.20 and the same 48.50. Now let's take a quick step back. It's Monday after all, and check in on the virus issues here and where we are at in terms of COVID-19. Now you've got Russia, Germany, and Portugal reporting an expanding spread of the Delta variant that was first, of course, detected in India. Now, the U.S. border is also unlikely to reopen completely. That's until 75% of Canadians have been fully vaccinated. That's according to their border chief in Canada. Meanwhile, in the Philippines, I do have to caveat this: vaccine doses here in the Bloomberg terminal are a little bit delayed, as they have mentioned that we've already breached the 8 million rate mark. Now, the Philippines is also planning to speed up the inoculation for its youth later this year. That's, of course, after we did report already the signing of the Philippines with its biggest supply deal with Pfizer and BioNTech. Now, that will be 40 million doses expected to be arriving from August, and that would take our vaccine supply to 157 million. Now, just a quick update on where we are. More than 8 million doses, as mentioned, already inoculated. And the daily inoculation rate is now targeted to be 500,000 by the third quarter and at least 740,000 by the last 3 months of 2021. The highest we've seen so far was on June 15th at 323,000 that day. Now, here to chat with us about the markets open and what we should be expecting this week, we have with us, of course, Royce Aguilar of First Metro Securities. Good morning, Royce, and welcome to the broadcast.
Hello, good morning everyone. Good morning, Danny.
Royce, opening the markets, as you hear a bit of a slide, and you can see that it's not just today, but it's happened over the last 3 days. We were not able to breach the 7,000 levels. We're down at 0.5%. But tell us what's going on here, just in terms of sentiment. Of course, last week, it was the Fed decision that was rocking and causing some volatility, versus, of course, the Banco Central looking to hold rates, in their next policy meeting. Tell us, what are the markets expecting this week?
I think for the markets this week, you mentioned already the vaccine-related news that the Philippines will receive around 40 million doses of Pfizer by August, right? And there's also a news that the government will sign a supply agreement sometime this week with Johnson and Johnson for 6 million doses. That should support the market, but the question is, why is the market going down now? Because of the it's still related to the U.S. Central Bank. Keep in mind that there are several U.S. Central Bank members that are slated to share their monetary policy stance this week. If you recall, why was the market down last Friday for the U.S.? Because one member, C. Bullard, mentioned that kind of a hawkish stance, and that will be the same story this week in terms of cautiousness, where investors will expect or investors are awaiting what other Fed members will say. That's why there's somewhat of a risk of sentiments to start the week. Nevertheless, the news of the vaccine dose should support the market moving forward. So
Okay,
that yeah.
Rice, just to question that, what is the exact effect, if the with the sentiment, and why hasn't it been completely priced in yet? Why is there still some reaction happening here in terms of the Fed tightening? Does it have anything to do with what markets are hoping the BSP could do? I mean, should the BSP be following in the footsteps of the Fed in terms of tightening?
Not necessarily. I think the BSP should maintain at least its own strategy in terms of monetary policy moving forward. Because at the end of the day, for example, in the US, it's because they're already seeing high inflation, and they're seeing high inflation because of the reopening uh, that they are experiencing. For us, Nikki Map already mentioned regarding what type of recovery that we're seeing right now. And that being said, the BSP should have its own set of analysis. Oh, they should take that into consideration, but that doesn't mean that they should already raise interest rates, given that Fed already talking about it. So there. So I think
Would
besides that,
the Fed's language actually have a direct impact on the foreign fund flows? We've already seen them coming back in, and then we saw quite an exodus again last week after having already had some consistent fund flows for a few days.
yeah, I think if we were to specify the net foreign selling last week, it was really specific to select stocks, and it was several block sales, right? Usually block sales are not are more on company specific rather than market related issue. So we will further analyze the net foreign selling activity, or the foreign activity this week. Should we see more foreign entry or exit? So I think last week was just somewhat of an isolated um, case. So
Okay, are foreigners watching the vaccine story at all in the Philippines? I mean, are they, every time we report the numbers, every time we sign some vaccine deals, do you see that there's more interest coming back into the country, or not necessarily?
well, actually, you saw the bulk of the reaction from last week of May until 2 weeks ago, right? Keep in mind that last month the issue was the MSI related, but you saw foreign buying come back strong after the MSA. That tells us that there's really demand for cheap Philippine equities. It's just a matter of when they will buy, and they actually bought after the MSCI, which was kind of strategic for them because they know that during MSCI related activities, there's a tendency for the market to go down. So
Okay. Final question on the index before we move on. Will we be breaking 7,000 and anytime soon, or is this too strong resistance to break through?
well, if you want to talk about fundamentals, there's really a support for that. Besides the vaccine, I think there's also a slight reopening prospect, specifically in NCR. We already saw some signs of easing last week from JCQ with high 10 to GCQ with some restrictions. So in terms of story, in terms of fundamentals, we have support. We have a support. It's just a matter of what's happening also globally that's also affecting the market. There's also the issue with the Delta variant being stronger than other variants, with vaccines having lower efficacy to the Delta variant. So that's also being taken into consideration. So, but if you want to talk about what's happening locally, we have support. So,
Okay, right. So let's move on to the REIT story because that's quite exciting. Megaworld turn now filing with the SEC, and they're planning quite a big one, 27.3 billion. They said not just the biggest in the Philippines, but the biggest in Southeast Asia. Tell us, won't this sap so much liquidity, especially as they trail Phil Invest, which will be also happening in the third quarter?
well, that's actually a good point that you brought up in terms of liquidity, where the market is just getting more of it right now. Nevertheless, I think in the short term that could be an issue. But if you want to talk about long term, if for example, if I'm a global fund manager, it will just make Philippine investment more attractive because they have lots of options, they have lots of strategies to work with. For example, if they see some kind of a risk of sentiment in select index names, they could easily shift to REITs, but they're still in the country in terms of investment. So I think it's a short term, let's say short term pain but long term gain kind of effect. So there.
Do you believe their story where they're saying that the work from home will not necessarily affect their tenants in the long term? They're still seeing, BPOs returning to commercial leasing because, banking on these REITs basically means you're banking on that return to the office spaces and a continued high tenancy rate.
Yes, well, definitely, I would just refer it to other countries. Into, for example, in the US, it's really a mixed kind of scenario. Some companies are already making their employees go back to physical work, while some are still allowing work from home. And I think that could be the same for us, because I think the problem here is they're seeing more efficient in terms of working in the office. So some companies believe that, and I believe some companies will implement that, especially if their employees are already vaccinated. And I think it's a good thing you brought up that BPOs will pick up the slack, because that's what we think also. Because of course, in terms of POGOs, that industry provided the lift for some years, but given the recent crackdown, and I believe also some POGOs prefer other countries, BPOs will definitely pick up the slack in the long term. So that's also our view.
Bryce, what yield should you be watching out for when it comes to this? Because they're looking at 4.1% for year ended 2022 June. At the maximum price already. Is that attractive enough? And you've got Phil Invest around the 5.5% yield
Well, when you
compared to,
compare
let's say, just buying the stock na lang.
that yeah, that's also a good point, because when you talk about the already listed REITs, when they listed, for example, AUREIT and DBMPR, their projected yield was at least 5%, right? So that's kind of the yield to beat, right? If your yield's not at par
Mhm.
or higher than that, they would just prefer other REITs or even common stocks, especially right now. The prospects of reopening, there's really upside in common stock. So it's really a company specific analysis for that one, right? So for REITs, kasi we're also evaluating, besides yields, we're also evaluating how much are their exposure to POGOs, because that could result to earnings volatility, and moving forward, that could result to yield volatility. So there, so there.
Okay, so watching out pa rin for the type of tenants they have, not necessarily just the dividend play that they give. So thank you so much. Those are great insights, of course, from Rose Aguilar of First Metro Securities.
Thank you.
Checking in on the biggest headlines we are watching this morning, the Energy Department is considering delaying the first round of the green energy auction as the auction committee is still compiling data that may have an impact on the offer's design. Now, Renewable Energy Management Bureau Director Mylene Capongcol confirmed to Businessworld that the GEA committee has recommended to move the auction's first round beyond the initial schedule this month. The green energy auction will allow qualified renewable energy developers to supply a portion of the electricity generated by their facilities to eligible customers who may, in turn, enjoy power prices below market rates. For the UP Institute for Maritime Affairs and Laws of the Sea, the country's shift to a sustainable energy future can be fast-tracked through the phase-out and repurposing of coal-fired power plants. IMLOS Director Jay Batongbakal says the ADB and the Finance Department are currently in talks to repurpose and convert coal plants into facilities generating cleaner energy to prepare for possible legislation. The Development Bank of the Philippines will extend loans worth up to 12 billion pesos for hog farmers. That's as the industry recovers from the ASF outbreak. The credit facility will support construction of biosecure pig farms and equipment acquisition. DBP says local government units and private companies can tap the 12 billion lending facility to build breeder farms, swine wean to finish farms, and consolidated swine facility projects. The bank can lend up to 100% of the project's total cost for LGUs and 70% for private companies. It will have a maximum term of 10 years plus up to 2 years of a grace period. And that's a first look into the business day. Today is June 21st, 2021. Catch Business World Live for the market close. It's at 3:15 p.m. today. I'm Danny Laurel. Mask on. Wash hands. Stay safe. Philippines. We are One News.